Welcome to everyone, and many thanks for joining us today in this virtual roundtable on social bonds organized by the ICMA Social Bonds Working Group. My name is Fernando Rodriguez, and I am advisor for the funding and investor relations at the ESM. The Social Bond Working Group at ICMA, alongside another 4 working groups, was established to promote the development of the social bond market through the consolidation of the social bond principles, as well as to establish a market forum for potential social bond issuers, investors, and market participants. With this key objective in mind, and as promoters of this initiative, at the ESM, we truly believe in the direct dialogue with market participants as a very powerful tool to create fruitful relationships and confidence with our direct counterparties. Therefore, following the various initiatives already established over the last year in the promotion of this market, like the survey of investors, we really wanted to step up this year and organize an open and public dialogue among issuers and investors. We all hope at the working group that this roundtable can be useful to the social bond market to answer many of the questions and challenges we face in forthcoming years. Looking back to 2020, the pandemic crisis accelerated the growth of the social bond market, which has tripled in size compared with the previous year. In our case, we were among the issuers who established a social bond framework last year in record time to be able to finance our newest assistance program, the Pandemic Crisis Support Credit Line, through the issuance of social bonds. This facility is still available for all euro area member states until the end of 2022. The SURE program of the European Commission for Jobs Protection, the European Investment Bank support for businesses, and our ESM Pandemic Crisis Support Credit Line together constitute the joint EU response to the crisis. This pandemic has shown us how quickly this market can be developed to finance real social issues, in this particular case affecting public health. But what are the challenges ahead of us? Are we experiencing a real segmentation of labeling bonds in the social bond market? Or on the contrary, do we need more clarity in the definition of the social bond principles? Should perhaps a social bond taxonomy be the next step ahead? Or what are the latest developments regarding impact measures and impact reporting? How are the EU versus US dynamics going to evolve in the next few years? To answer all these questions, we have today 3 interesting perspectives, focusing first on European issuers as pioneers in social bonds, an investor perspective, and additionally 2 more participants from other regions who will provide an international view on the social bond market developments. The session will be moderated by Agnès Gurk, who is co-head of Sustainable Capital Markets at BNP Paribas. I would like to thank all the participants and people involved in the various working groups for their work, dedication, and efforts to continue developing the sustainable bond markets. And of course, a special thanks to ICMA for their support in the organization of this event. Now, I pass the floor to Agnès, who will guide you through the session and will introduce all the panelists of today. Thank you very much and enjoy the session.
Thank you very much, Fernando, for the introduction. And indeed, thank you very much for ICMA for organizing it. So I would like to welcome, first of all, the many of you that are joining us today. And as Fernando pointed out, there's been a tremendous growth of the social bond market. And looking quickly at figures, you will notice that both last year in 2020 and this year, 2021, the social bond market is about 30% of the overall ESG bond market worldwide. And when you extend it to sustainability bonds, that for a large part have social projects in it, you even go up to 50%. So we thought it was a very good time to really debate on what this market looks like today, what will it look like tomorrow in our view. And in that respect, we're very fortunate to have a lineup of great speakers today. So just as a reminder, effectively, what we are doing within the principles and the social bond principles working group specifically, it is not only actually developing the principles themselves, but it is also through the various working group, and there are many actually sub-working groups for social bonds, developing a whole array of documents supporting actually the principles that are here to help market participants, issuers, investors, SPO providers, so the whole ecosystem. And actually you have those documents on the platform today as well as a reminder. And there'll be a new document that will be released in a couple of days' time now for the AGM that will start covering a little bit throughout the panel. That will be really a checklist even that we hope will simplify even further the process for issuers with specific items, not to forget, but also questions to ask ourselves as issuers or as arrangers or as investors when it comes to social bonds. So without further delay, let me introduce you to our panel today. So we have Alessandro Gargiuli, who is Head of Group Treasury, Funding and Corporate Finance for Cassa Depositi and Prestiti. Arturo Secco Presencio, who is Deputy CFO for Council of Europe Development Bank. Anna Stavovi, who is in the Treasury Department for Deutsche Credit Bank. James Hay, Investment Associate for Main Street Partners. Michael Kashani, Global Head of ESG Portfolio Management, Fixed Income for Goldman Sachs Asset Management. Isabelle Vic-Philippe, who is Head of Euro Aggregate at Amundi. Farah Imrana Hussein, who is Senior Financial Official for the World Bank Treasury. And Jojo Al, who is Sustainable DCM Solutions for Mizuho International. So could I ask, please, maybe Alessandro, turning to you, so as Europe has been clearly the largest in terms of issuance of social bonds to date, at least, could you remind us really what issuing a social bond means for an entity such as CDP? And I think to many in our audience, it will be even how do we go about issuing a social bonds? What are the first steps, the practicalities in terms of identifying social projects even?
Thanks a lot, Agnes. As you can understand, the Cassa Depositi e Prestiti, just to let people understand who don't know exactly who we are, a few, but actually we are the national promotional institution in Italy. So actually in our commitment to the ESG is inside nature of our business. We are a pretty old institution. We are on the street since 1850. And since that time, we have always fostered the social and sustainable development of our country through investments and obviously supporting the growth of the most, let's say, important business in our country. So, as you can understand, social is inside our nature. So when we decided in 2017 to start this journey through the first social bond, obviously it was a bit easy for us from, let's say, an asset perspective, or was pretty complex to put in place a framework that 4 years ago was not so common, we can say. Since that time, so since 2017, in reality, we've been able to issue 5 social bonds out of, let's say, the 6 transactions that we are issued from an ESG perspective. So we are definitely a social bond issuer. So it would be a pleasure to put some of our experience and common ground to this roundtable. We have issued, as I said before, 5 bonds for 3.75 billion euro. And 2020, in particular, was pretty busy for us because we have been really active on the market with the 3 transactions. When you said, I think it's important to underline the fact that once an issuer, as we are, decide to go out to the market and issue a social bond, I think the most important thing is to have let's say, some information related to the so-called eligible assets that can be used for this kind of transaction. Because in this panel, I see some investors, some really important investors, and I know how they are keen to understand how the issuer is going to use the proceeds. In order to reply to the investors' questions, but also in order to have clear in mind what we have to do, what we want to do with our proceeds, we have established, let's say, a cross-functional table inside our group, where not only the finance department, but obviously the business, the sustainability team, and the investor relations department study how to, let's say, which will be the eligible asset we could use according, obviously, to the business side of our nature, and in particular, in order to try to find the right fitting with the framework that we have in place. So in reality, what we do is first work on, let's say, to do a lot of homework internally in order to study which kind of eligible asset we can use. We have a strong relationship with the second party opinion provider that we need to use in order to go ahead with our transactions. And last but not least, this experience allowed us to, let's say, reduce the time to market every time that we have decided to go out to the market with a new social bond. Also with pretty, I don't want to say sophisticated, but definitely new bonds. Like I mentioned, February 2020, we have been issuing the first social housing bond, obviously related to social housing activity that we put in place since a long time. And last but not least, the COVID-19 social response bond that we issued last year to try to give the best responses possible to the pandemic crisis and the emergency that affected our country. So in a nutshell, I would like to sum up saying that eligible assets and the study and analysis of the eligible assets for us is crucial. We put a lot of efforts in order to select the right ones, in order to deliver to the market what we think can be suitable for the investments of the investors. But at the same time, we are keen to work again in order to find even more new assets in the future.
Thank you very much, Alessandro. So I will turn to Isabel, because Isabel Amundi has obviously set up a social bond fund recently. So it would be really interesting for the audience to hear your experience so far in managing this social bond fund. And actually, we've had a question as well coming across that you can probably cover as well, or at least start covering. How do you assess as an investor a social bond when there is actually not too much information available? So, and the question was, say they only say healthcare or only say underserved population. How would you go about that? If you can start giving a hint of an answer as well.
Thanks, Agnès. Before answering your question, I would like to just give the rationale of our approach. So, the first thing we try to do with the social bond fund is to answer some of our investor demand. And by leveraging on our experience, either on the impact investing experience we have had and we have developed during the last 10 years, and then also our ability to manage use of proceeds bond and our participation to the social bond working group that has been really of great value. So what we have done, we have centered our approach on what we consider as the most suitable instrument to reflect this social theme and social issues, which is the social bond, aligned with the social bond principles. So in our investment universe, we have a minimum threshold of 75% of social or sustainability bonds. And we have enlarged the universe at maximum 25% with issuers with the best social practices. We have done that to have a sufficiently large universe to fulfill our fiduciary duty, which is delivering performance, and also to address the controversial question about the liquidity of the fund universe, because for the time being, still the universe is tilted towards a certain part of issuers, such as supras, agencies, and to some extent banks, but there's a lack of corporate issuance in that field. So in this universe, the easy part is the bonds that are labeled social and compliant with the social bond principles. It's already a bit more complex with sustainable bonds because they are mixing green and social projects. So we need to have a threshold or a rule to assess their eligibility. So depending, we have decided, of course, to have a majority of proceeds dedicated to social projects, but well, our intention is to have much more than 50% dedicated to social projects in those programs. So it needs and it requires that we have, we conduct an in-depth review of a lot of programs, even some of the well-known development bank, because sometimes you need to have the final allocation of projects to deem and to be sure of the eligibility under this criteria. So and I come to the answer to the controversial question on how we tackle the social washing. And before investing, we have a strict process, and each issuance has to be analyzed and stamped eligible by our ESG analysts. So it's here that I can refer to the checklist you already mentioned, and I know that Anna will expand on afterwards. And it's I think, a good achievement of this year's social bond working group work, because what we do is pretty aligned with what is included is in this checklist. So there's 3 elements we are looking at mainly. The first one is assessing the transparency, the integrity, and the quality of the issuance. And this is where we look at the rationale of the issuance, the way projects are selected, how they are defined, how precisely they are defined. We look at the compliance with the social bond principles, and we look at the definition of the target population. And when, to answer the question, and when there's no sufficient information, of course, we engage with the issuer to have more information to see whether it's something they didn't think they need to disclose, or it was obvious for them, or to some extent. And if we don't have a sufficient answer or sufficiently clear definition, then it won't be eligible. So this is the first thing we do. The second thing our analysts do is to assess the ESG quality of the issuer. And in that field, of course, they look at the alignment of the social bond issuance with the activity or the business of the issuer, and they review whether there are potential controversies attached to. And the last point we value, it's let's say the icing on the cake. It's the integration by the issuer of potential adverse impact. So an example, social housing should be, for us, has to be, or has to have a component of energy efficiency, because it means that people living in those shelters will benefit from lower energy bills for long. So it has really a social aspect embedded in it. So, and here I would like also to refer to the work that has been done by the social bond working group on the SDG mapping, where they have listed the potential adverse impact by SDG type, which I think will be super useful going forward. So I hope I have answered the question on the social washing.
Thank you very much, Isabelle. So Arthur, maybe as a historical and very regular issuer of social bonds, you can also help us understand effectively, how you put really best market practice, best practice into how you integrate it into your program. And I think from Council of Europe's perspective, you've always been very clear on valuing actually providing liquidity as well to the market, both in euro and now in dollar. So if you could give a bit more background as well as to the strategy and why you've been focusing on it as well, that would be really, really good.
Sure, thank you very much, Agnes. Well, the question itself is quite wide, so I will try to summarize it as best as I can, but definitely liquidity is one of the key aspects of or features of any given market. And when one decides to enter into the social bond market as a new segment, one needs to take into account the liquidity, the liquidity acts, in the sense that issuers coming with just one transaction may not be as well received as issuers committing with an overall strategy, and that we took it very, very seriously. I would say from the beginning, from the moment we start thinking about our participation in the social bond market. But I would like to start by recalling the CB exclusively social mandate, because it positions our institution as a natural actor as well within this social bond market. And from the appearance and growth of the green bonds, we had the sense that there was something to do in our side on the social arena, the social component being part of any market ESG initiative. So that was very soon into our minds to try to participate in the ESG market as a whole, but specifically in the social acts. We were therefore one of the founding members of ICMA, Social Bond Market Working Group in 2016. And we soon realized that we had a long-standing experience with reporting for the use of proceeds, as these are monitored for the overall social mission of the bank. This allows us to leverage for the reporting related to social inclusion bonds and being quite reactive, I would say, on the reporting requirements of any social bond transaction. Once we decided to issue our first social bond, we were convinced that in order to foster this market, we needed to be a regular issuer. And that is the reason why we committed to build the benchmark curve that we have nowadays in euros since the very beginning with our first social inclusion bond in 2017. This curve has today 5 different points, and each issuance was done out of 7-year transaction to build this curve over the years, with maturities between €500 million and €1 billion, always launched end of March or beginning of April. Again, to give a kind of transparency and regularity to the investors who are building a portfolio. We believe that this transparency and predictability are very important for the investors who are building their portfolios in a new market segment as the social bonds. And this strategy has proven to be of value for the investor base, for the market as a whole, and in any case for us, because it has allowed us to increase and to create a loyal and regular investor base for the social inclusion bonds. Just to give you an idea of percentage of social bond investors in this kind of transactions, we have identified that 60% of our Euro social inclusion bonds were bought by investors who participated in at least 2 of the social inclusion bond transactions. And that's really in the sense of diversifying the investor base of an issuer. This is really very interesting and enriches the investor base. Maybe a few words on the social bonds issued in dollars, because up to 2020, all the transactions were social inclusion bonds euro denominated. But last year, we decided to go with a US dollar transaction, which was also very, very successful and coming out of the interest that we had identified from social investors other than euro related. This transaction was, in fact, the first European supra-social bond issued in US dollar in benchmark size. And we are expecting to bring a second US dollar transaction in social inclusion bond format to the market in 2021. Well, timing to be determined, but it could be rather soon, depending on market conditions. As of today, and again, taking into account the aspect of liquidity and volume, we have been trying, and we keep on trying to maintain this regular issuance. And we have roughly 3.5 billion euros outstanding so far in social inclusion bonds, out of which, well, the majority as of today is euros, but it's when we take the whole amount together, it represents 13% of our total outstanding debt. So 13% of social inclusion bond format is very significant for an issuer. This has been one of the objectives from the beginning of our participation in this market, to be a relevant issuer in terms of our overall debt size, and we are committing to that, and we think we will be able to maintain this percentage out of the total outstanding. As a final comment, I would like probably to comment on the growth of the social bond market, how we see it. I believe it is not only about new issuers offering social bonds, but also about issuers extending their curves, having new points, new maturities in the existing currencies, in the existing curves, and also diversifying toward new currencies, and more specifically to the US dollar. I believe, and we are seeing that US dollar is gaining traction, and we have more and more demand from, or more and more interest, I would say, from US dollar based investors. And we believe that this is also taking place because, the mainstream, quick mainstream that ESG is taking across the globe, and the fact that many different investors with different strategies, they are also incorporating ESG aspects, and within ESG, the social element. So I hope to have given an answer as precise as possible, given the broad range of elements of the question.
Thank you very much, Arturo. So what I would like to do then in that context of actually currencies, Michael, as you oversee ESG portfolios globally, could you give us your views of what you see in terms of demands for social bonds in dollars versus euros at Goldman Sachs Asset Management? And if I may, we have a question as well from the audience, looking at how do you see investor demand? Is there a differential between green and social? What kind of impact that can have in terms of pricing? And I know we touched upon it in previous discussions of differences you can see there actually potentially between dollars and euros as well. So sorry, adding a little bit to the question here.
Thanks, Agnes. And I'll actually follow up on something Isabel said, Agnes, before I get to your question, because in fixed income, engagement and fixed income need to be synonymous. And I really appreciated what Isabel said, is that engagement with the issuer. For not getting the information, we have powerful platforms to ask. And I'd say in addition to the issuer, if there's any underwriters in the audience, we will also engage with you, because you are also the gatekeeper of allowing certain information. We know that sometimes you may give advice and the issuer may not follow it, but that's also a powerful tool. So when we see certain, I'd say, issuers issue, and we maybe see a certain underwriter be I'd say, a common player and maybe some lack of information. You noted something that's very broad, just healthcare, maybe not connecting it to an SDG KPI, which can be a very helpful area. I know that that's an area where we can hopefully, as an industry, improve, is that engagement element. So getting back to your question, Agnes, on US dollar, it's fascinating. We all see, I think all of us are working from home today, and the COVID crisis has really, I'd say, energized the investment community, the asset owners, the clients we serve at Goldman Sachs Asset Management, to rethink about their commitment to social issues. And so in many ways, our US client base is as interested in green bonds, social bonds, as they are in green bonds. they view them as a cohesive impact tool, especially, and again, I appreciate what Isabella said, which was investing. We need to have an investable universe. So if they're looking at a holistic potential for impact, I'll always say green social sustainabilities have the potential for impact. They don't always achieve that. But if we look at the potential for impact, social bonds have been an extremely useful tool for that. So I'd say the last part, which maybe the entire audience isn't familiar with, is we have this whole other market in the US, municipal bonds. And that area has, I would argue, an area of social bonds, labeled and sometimes unlabeled. We're trying to help improve that. But areas of impact and the disclosure is not great there. So part of the issues are being mindful not to get too excited about the market before it's there. But our client base very much wants to see, in the US at least, wants to see that balance between social and green. Now, to get to your other question on liquidity, because I know that's also been asked, or the demand pricing, I think social bonds are a bit under the radar right now, which is a fantastic opportunity. I think that there's an area where the green identification is seen as a bit more broader in its level of demand. Obviously, we have European clients who buy USD as well. So it's not just US clients that are looking at US currency. But that social tag, I would say the social identification evaluation is still not as in demand as before. I think it will get there. We think it will get there at Goldman. And I think the opportunity there to establish positions that we believe will be very liquid in the secondary market has been very advantageous, I would say, to first mover clients. We do a lot of separate accounts. I know we were speaking about funds, but I think the amount of separate accounts that have these green social sustainability targets or majority, it is almost this unstated area of demand, which I know the underwriters know because they're seeing these large oversubscribed purchases, and the issuers also see that. A lot of this is coming from these large institutional clients who have these separate accounts. And I tend to see them as more interested in social than maybe the fund type clients. I don't know if any of the other panelists see that balance, at least in the US, that's what we're seeing. I see Isabella. I'd love to hear what Isabella thinks of that view, maybe in maybe broader Europe, if that's also the case on social.
Definitely, there are investors, institutional investors that have already pockets invested in social bond. The fund is a vehicle so that everybody can participate to the market. So it's for retail investors, it's also for institutional investors, it's for every investor that want to be involved in the market.
So I would like to turn to Anna, because obviously DKB in itself, in its own right, has played historically a key role in the market, having been a very early issuer of social bond. But Anna has played also a very important role in development of the document. We refer to the new document that we'll publish at the AGM. So Anna, maybe if you could tell us a little bit on the background of the document. And I'm thinking amongst all the questions we have, there is one question as well on how can investors identify issues with best practices. So maybe that's also a question you can tackle as part of your answer.
So a warm welcome from Berlin, and thank you, Agnes, and also to ICMA, that we as DKB can also participate in this very valuable roundtable. So I would like, first of all, to take you back to the year 2016. This is actually the year when DKB first stepped on the sustainable funding floor. And as we issued our first senior unsecured green bond, which was both first for ourselves, but also for the green bond market in Germany. And it was just 2 years later when we decided to actually add another element, a sustainable element to our funding strategy, and simultaneously also another color to our funding strategy, which is blue. And actually this color represents on the one hand DKB, but also it all underlines our own sustainability concept, which is called blue sustainability. And the idea behind this is a clear expansion of the concept of sustainability beyond green, focusing equally on social topics, which is also today's focus. So to sum it up, you can say that for DKB, blue actually is the new green. And having said that, I would just like to find a quick words on our social bond framework, which is, of course, the starting point of every social bond issuance, and it is aligned with the social bond principles. And for us, it was very important to have a very broad universe of categories, because it, on the one hand, shows the financing universe of DKB, but it also offers a wide range for investors to meet their investment needs. And just to name some categories, we have put in our social bond framework not only social housing, but public supply, health and care, which is very current during the pandemic, but also education and research and inclusion. And DKB so far has issued 3 social bonds. 2 of them were benchmark format and 1 retail issuance. And all in all, they are in a covered bond format. And as you can see, the experience of DKB as a social bond issuer was also our motivation to contribute to the further development of the social bond market. And we as DKB aim to do that in a very practical and very pragmatic way. So this is actually when we came up with the idea, how can we promote so the social bond market? And in the end, the idea was to build up what Isabel mentioned before, a social bond program pre-issuance checklist. And so this is coming back to your question. This document actually aims to give more or less step-by-step guidance to note by establishing a social framework or a bond with primary reference to the social bond principles. And in the past years, ICMA and its members have worked on very helpful and several documents that also can be found in the resource center of the ICMA website. Just to mention a few is, for example, the high-level mapping to the Sdgs, and also the harmonized framework for impact reporting of social bonds. And this was also all condensed in one document, and also put with the links, and the overall structure of this document has more or less, not to tell you too much before it's going to be released in the AGM, is that it focuses on 3 pillars. The first one is the strategy and rationality. So it helps it helps issuers to find the step-by-step guidance and to explain how they actually build their own social or sustainable strategy. And then the second pillar would be the alignment with the social bond principles. And also the third pillar is to have a look at the external review providers, because this all in all sums it up and is important before issuing a social bond, because the framework and the second party opinion come first. So actually the result of this document was a very great interdisciplinary cooperation within the different sub-working groups of the whole social bond working group, and we as the whole group really hope to have provided a very condensed and very clear and helpful document, and therefore to promote the social bond market also from the documental side. And the question you have, I actually forgot the first question. Yes, you need to help me out, please.
The question was, because we have quite a few questions around that actually coming from the audience, and it's more around how can investors identify best practices when they see transactions coming to the market. So I think, as like you say, we try to be pragmatic, and I think the document that is going to be published is exactly addressing that. So in a way, maybe some of the answer is we should have something useful coming out soon.
Yeah, and maybe just to in addition that there's also a sub-working group which is working on case studies. and they are building up also very useful documents, and maybe this all in all will also help investors to get a better idea of the kinds of social bonds, and also the way every issuer has taken to that has led him or her to the social bond framework, and the issuances that follow afterwards.
Thank you very much, Hannah. So James, I would like to turn back to you. So as part of your ESG investments at Main Street Partners, you are spending obviously a lot of time with issuers of social bonds, and Isabel and Michael pointed out to that very important part of the process, actually. What would you say is the topic that you spend the most time discussing with social bond issuers? And if I may, I don't know, if you want to answer that question, but I'm seeing a lot of questions coming through. And I think one of the topics that, and I know it as an arranger, one of the topics that a lot of issuers want to talk about is actually in terms of pricing as well. What does it mean for a social bond issuer in terms of pricing versus potentially their conventional curve? So if you can tell us what you spend most time discussing with social bond issuers, what is the critical element you want to clarify or impart to them? And I think they want to know about pricing. That's what they're also interested in.
Thank you, Agnes. It's a pleasure to be here today. So one of the key issues we focus on at Main Street Partners is the target population. Because we believe that a well-defined target population provides clarity to impact reporting and measuring the social benefit. Therefore, we encourage issuers to be quite explicit about the target population. And the social bond principles also contain some guidance on this issue. Now, obviously, last year, we saw a large number of social bonds hit the market in response to the COVID-19 crisis. As we all appreciate, this was and still is a major social issue affecting the global population. And for this reason, a number of social bonds issued last year were targeted towards the general population. Nonetheless, I'd like to put such issuances aside and focus on social bonds achieving beneficial social outcomes for a defined target population. One of the early comers to the social bond market was the African Development Bank, which published its framework in 2017 and included defined target populations covering those living below the poverty line, vulnerable groups, or the undereducated, underserved, or unemployed. The very targeted nature of the projects financed by the African Development Bank provided clarity to their impact reporting measures. For example, reducing the child mortality rate, increasing access to sanitation, and reducing the poverty rate in specific locations. But not all issuers serving a public interest are at liberty to restrict their funding activities. For example, when Caisse d'Amortissement de la Dette Sociale, which is the financing arm of the French social security system, published its social bond framework last year, it explained that although the social security system serves the French public, again, in general, social security benefits are only triggered by an event such as illness or workplace injury, which leaves individuals unable to work. Another example of an issuer which paid strict attention to target populations is the Council of Europe Development Bank, which detailed specific criteria to determine the eligibility of projects. The rationale behind this is to ensure that the use of proceeds find their way to those who are genuinely in need, because that's where you can deliver the most impact and additionality. So in summary, the best stories are those with a compelling narrative, and being able to communicate targeted social outcomes which are genuinely impactful is the ultimate goal. And the best way to do that, I believe, is with a well-defined target population. So I'd also like to address that pricing issue. I think I've seen a couple of comments here about greeniums and social bonds having different prices. I've seen some questions about if we have a way to actually deal with this. Yeah, there are mathematical approaches to dealing with that pricing issue. But I think in terms of demand, we're seeing issuers who are very interested in the social bond space and the green bond space. But I don't think that necessarily has to result in lower returns, although we have seen occasionally there might have been some issuances where there might have been a 1 or 2 basis point greenium. I think the social bond market is still relatively small in size. So I think for a robust statistical analysis on the pricing, perhaps maybe haven't been enough bonds that have come to market. But I think at Main Street, we're very much focused on achieving these social benefits and these targeted social outcomes without really giving up any kind of financial return, right? We're looking for like a market-based return. As I say to people, sustainable investing really is about achieving social and environmental benefits, and achieving a financial market return at the same time, because any concessionary return would be philanthropy, and we're not in the business of philanthropy, we're in the business of sustainable investing.
Thank you very much, James. So I'll try to turn back to Alessandro, and we've had a few questions coming in as well on that topic. Obviously, you mentioned, and we've covered through the other panelists as well, how you select assets. The next things, once you've issued a social bond or several, is what do you do with the reporting of allocation, but very importantly as well on the impact of the projects. And at CDP, you've very much focused onto that for a number of years. So if you could tell us a bit more about that. And there is a question you may want to keep in the back of your mind as well, as we talk already a lot as well about what investors are expecting. A few people have asked, so can you highlight, once again, what's in it for issuers, basically, when they come to the market with social bonds? Slightly different topics, so see what you can do maybe with those two questions.
Okay, thanks again. So we'll try to cover some points. I would like to start from reporting, because I think that a lot of messages have been passed through the other panelists, and I think that eligible assets and reporting and disclosure, so there are some words, crucial words, that in some way we have to address as an issuer, at least from our side at Cassa Depositi e Prestiti. So in order to reply to what in particular investors, but in general all our stakeholders would ask from our bonds issues, we have always been keen to try to deliver the highest disclosure possible to our stakeholders, obviously particularly investors. So we are committed to publish, according to our framework, we are committed to publish from 1 year from the issuance of every bond, and I will go back to this kind of every bond. So we are committed to publish the results and how we have used and allocated the funds related to every issuance. Obviously, as I said before, our let's say teamwork with several departments internally allow us to have a clear view before issuing the bonds about what we want to target, not only in terms of target population, which is one of the crucial wording mentioned before, but also related to the assets that we are going to finance through our bonds issuance. So the work that we do is pretty sophisticated. So we try to elaborate some KPIs and provide measures related to the allocation and how have been allocated the bonds the proceeds of our bonds. So for example, it depends obviously from the bonds that an issuer, let's say, issue on the market, but obviously it's important to, for example, allow the investor to know how many jobs have been created or retained. That I think that from a social perspective is one of the best or one of the most used KPIs in this moment. But obviously we try to provide also other KPIs that have to be compliant not only with our view, but I would like to underline the fact that every reporting at CDP has to be reviewed by an external review from the second party opinion provider, and actually have to verify and to assess if our reports impact in some way in the contribution that we are able to provide to the United Nations Sustainable Development Goals, for example, to the alignment with the social bond principles, but also to the soundness of the KPIs that we report. Again, as I said before, despite the fact that the bond by bond reporting, as you can imagine, is pretty intense in terms of time and efforts that we have to provide to this kind of activity, we really think that this is the only way, at least at the moment, in order to provide insightful information, reliable measures about the KPIs that we can provide, and to estimate with as precise as possible the magnitude of our interventions. I would like to leave the floor with a few numbers, if I may. We have provided 4 social bond reports so far. Every bonds issued by Cassa Depositi e Prestiti has reached the full allocation within 1 year from the issuance. We have been able to provide, thanks to our bonds, more than 700 beneficiaries, more than 50,000 jobs created or retained. We have financed more than 3,500 projects and initiatives, and we have been able, last but not least, to provide our funding to more than 1,000 corporates and local authorities. So I think that at the end, what is really important from a social bond perspective is what are you able to target and how to use your funds. So I think that these numbers and what I said before give a bit of comfort to everybody that, at least from our side, but I'm sure that all the issuers on this market they are trying to do their best in order to provide comfort and disclosure to the stakeholders. You mentioned, sorry, the one point that I missed of the questions raised by the
question was, what is in the social bond market for issuers? Because obviously we've described everything issuers, should aim at doing, how they select really good projects, how they start reporting on them. So just to, for issuers not to be overwhelmed and really kind of what's in it for them, basically. I think you answered that in the last part of your
yes, I think I have already provided a question, but I think that again it's as much as possible we are trying to do our best. So I've not too much to add. In reality, there is another question that I see for issuers, if I may, related to how we think to, let's say, allocate in some way conventional versus other kind of, let's say, ESG funding. I can reply for CDP, if I may. So our intention is to go ahead with our ESG strategy. As I said before, we are a social bond issuers and we want to be a social bond issuer. So we will try to go ahead with this kind of strategies. So for us, this roundtable and all the developments that will happen on this market will be crucial for us, and I guess also for other issuers that wants to join us in this kind of market.
Thank you very much, Alessandro. So obviously it's a very extensive topic and again, a lot of questions. So we're going to use the next 10 minutes before we move on and try to cover really, the rest of the world as well in a bit more detail. I'll try to cover 2 topics really with you, if we may. Maybe Isabel and Michael, if you could try to just give briefly your views on reporting from the investor side, where you see there may be gaps or actually what is very well done today. So maybe if I give you kind of a few minutes to do that, and then I have really a few more questions. So Isabel, do you want to start just on reporting with your highlights?
Okay, very briefly, Agnes. On the issuer level, what is provided by issuers is normally of great value. The quality of information is great. And what we look at is the commitment with what has been said prior to the issuance. One remark I would like to have is and what can be improved. It's an assessment maybe of the benefits of the projects. I mean, if there's something different to do to have a better result. So this is something that is not fully addressed by issuers right now. At our end, as asset manager, we have to collect data and to build or disclose a proper and meaningful indicator or set of indicators. So it means aggregating data. And here is the main problem, because it means first to have a database, to have all the information. So for the time being, we have built an internal one on the allocation of proceeds. So we already are able to provide the allocation with regards to the categories that are included in the social bond principles. But when it comes to the impact, it's still work in progress, because to build a proper impact reporting, what we see is that the number of beneficiaries is the most common indicator, but it's not a perfect one. So we need to work more on that and to provide something that is sufficiently clear to our end investors. And we are working around the notions that have been set up last year during the social bond working group. I mean, the notion of output, outcome, and final impact. I think they are quite useful. They have been defined last year and they have been updated this year with the COVID angle. So next step for us is that one.
Yeah, the investor requirements here are quickly gaining traction. And the answer of we don't have impact measurement yet is just not sufficient. And I think that that's a strong message to the issuers. We don't think it's easy. We know it's not easy, but just to know the demand builds when you provide additional information. Even the attempt to try to figure that out, we personally note those attempts as a stronger approach in terms of a framework. So from our perspective, we understand that measurement of social outcomes is difficult. I think that we have, as a group, all the participants in ICCA's working group have worked to create frameworks and best practices. And so what we would say is initially have those initial attempts. And I think that investors are a bit forgiving for the first adopters, and knowing that there's going to be additional work on getting some greater level of uniformity. But we would strongly encourage a level of impact, I would call it measurement, around key themes, and you don't have to look hard. SDG key factors, KPIs give you a fantastic roadmap, and I'm going to plug our mapping of SDGs to the social bond framework. It's in the materials that I believe all of you have. It's a great framework to try to follow.
Thank you, both of you. And I think there is another resource you wanted to point people to as well, if we can do that very quickly. Thank you.
Yes, in a nutshell, as you mentioned before, that actually the momentum is growing. And I think social bonds have played and will be playing a more and more important role. And this is, I think, also a good sign. And there are also a need to give more standardization also to the covered bond space when it comes to social bonds. And actually the Association of German Pfandbriefbanks, the VDP, has established a minimum standards for social Pfandbriefe just early spring this year. And they follow the establishment of minimum standards for the green Pfandbrief, which has already happened in August 2019, I guess. And just to give two ideas of the standards, so among other things, they are based on the Pfandbrief Act and they need to be compliant with the social bond principles. But I think what is also worth mentioning that they go beyond the social bond principles, focusing also on the do no significant harm criteria or requirement, which we know from the taxonomy. So there's also a need that climate-related topics need to be targeted, and more specifically that the eligible assets and their positive social impact should not counteract or have any significant negative impact on other sustainable objectives, for example, like the ecological nature. And I think this is something that brings also the green and the social bond universe in a greater balance. And for the time, DKB is the first VDP member institution to issue a social Pfandbrief. And we hope that this transparency and also standardization will enhance other issuers to follow our path and see more social covered bonds coming the way.
Thank you very much, Hannah. James, can I, very difficult topic to cover quickly, but just obviously, and we've seen it today as well, there's a lot of SSA issuers in the market, commercial bank, but actually very, very few corporates. could you tell us kind of where we see the market going there?
Certainly, Agnes. So in the corporate sector, there are really two obstacles to issuing a social bond. The first is finding the eligible use of proceeds, and the second is the size of the asset pool. So I'll deal with this size issue first, since I think it's simpler. And it's that most investors are looking for social bonds of a benchmark size, but many businesses simply struggle to find capital expenditures of a sufficient size, which would qualify under the most common social project categories, such as access to essential services, affordable basic infrastructure, or socioeconomic advancement. Nonetheless, one of the more accessible categories for corporates is employment generation, or SME finance. A large number of social or sustainability bond frameworks do, in fact, focus on this project category. EDF, the French electric utility, recently published a social bond framework based on its contracting activities with French SMEs. So when it comes to corporates, I really challenge companies to think hard about their social impact and to communicate their sustainability strategy to the market. Because if you're properly taking stakeholders into account, then you must be delivering beneficial outcomes. And in this respect, I think use of the 17 UN Sustainable Development Goals as a common reference to address sustainability issues can be very helpful in that regard.
Thank you very much, James. I'll just ask before we move to the world more globally. Arthur, is there anything you think we haven't covered from your perspective?
Yes, well, very briefly on my side as well. In terms of the pandemic effects in established frameworks and programs for social issuance, we realized very early in the pandemic situation that together with the health emergency, we had a social and economic impact which was coming very fast, and job destruction potentially being massive. So we need to timely and flexibly target the needs of the country members to try to see what we could do in these kind of situations. And what we realized pretty soon is that the framework needed to be changed, because it was just covering three sectors, and we needed to incorporate the health sector. So my point here is that even if we have established a framework, we are able to change it, or an institution is able to change it in a record time if the need is there. And in our specific case, we were very helped by ICMA again on the guidance to including activities related to COVID-19 in social bonds. So we did follow this guidance. We were, of course, needing a second opinion provider, but all the process was done in a record time. And the message is that even if we have an established framework and the situation in the market changes for specific needs, a specific issuer is capable of changing, and we realize that the support of the market, not only ICMA as an association, but other actors, as for instance investors, which great support, is always there to try to foster the market and to try to make things happen.
Thank you very much, Arthur. In a record time, thanks a lot for the explanations. Farah, could I please turn to you? What do you see from the World Bank perspective? What do you hear most from your client, and how is the technical support you provide able to support them into coming to the market? And I guess region by region, you may see differences as well.
Sure. Thank you very much, Agnes. I obviously work with emerging markets, with ministries of finance and other public sector counterparts. And we're seeing a lot of interest in issuing social bonds from our clients, from these public sector issuers. And clearly, the experience of the pandemic has focused their attention on the need for investment in social issues, in public goods, healthcare and elderly care, in education systems and social safety nets, but also the relationship between these social factors and economic growth. I would say that a lot of these interests was inspired by the issuances from the supranationals, like the World Bank and IFC and African Development Bank, IADB. They all went to the market early last year, highlighting their support for COVID-19 related activities and their alignment with ICMA guidelines and principles as they went to the market. And our clients have seen how these types of issuances, reaching out to a specific investor base has appealed to the impact investment community. So at the World Bank, for instance, we had issued a $8 billion global benchmark sustainable development bond, which is aligned with ICMA's sustainability bond guidelines. So it was the largest ever US dollar denominated bond issued by a supranational. And we saw after that, Guatemala issued their social bond. We saw Thailand issuing a sustainability bond, financing job creation through, the SMEs and to finance access to healthcare, etc. We also saw Malaysia issue the first sovereign sustainability sukuk last month, the Islamic version of the bond, and they're using it for affordable housing and share for COVID-19 related activities, etc. And certainly at the World Bank, we are also seeing in the public space, interest from cities and municipalities and state-owned enterprises. So the Indonesia Infrastructure Finance Company, which is a state-owned enterprise, issued a sustainability bond in January this year with the World Bank's technical assistance. So obviously, these types of public sector issuers, they fund a vast array of important projects that promote public goods, these hospitals, schools, and utilities. And there was a question about, police stations or fire stations, etc. These are all public goods, and these types of issuers should be able to finance these through social bonds, and it actually gives them an opportunity to sort of access financing through an alternative capital markets based funding source. So these issuers recognize that the social label of the bond drives demand, that it allows them to expand and diversify their investor base. We saw that with all the bonds that were issued last year, whether by the supranationals or by Malaysia or Thailand or Guatemala. In all cases, it attracted a diverse set of investors. They understand that these bonds attract international investors. Obviously, domestic investors in emerging markets are still feeling their waters in terms of ESG. They, when we talk to them, obviously we have a technical assistance program, provide assistance and facilitate these types of transactions in emerging markets and basically build sustainable capital markets. We work with regulators, with ministries of finance, with central banks. And what we hear most is, of course, other than the pricing issue that has already been mentioned here, we hear them say that size is often a constraint for them because the portfolio of projects that they have is often not large enough for a sizable bond that will appeal to especially international investors. And also, the questions that some of them raise is, all these different labels. On the one hand, they may be providing investors with a broader array of assets than seen before, but there is also the fear of, fragmentation and segmentation. Let me stop there. And on the technical assistance that the World Bank provides, as I mentioned, we have a sustainable finance program where we walk issuers through, how to issue these types of bonds. Our sector specialists help them identify the eligible projects, and that sort of gives the bonds more credibility. And I saw in the chat some of the questions about social washing and greenwashing, and having the World Bank provide the technical assistance and help the issuer. I believe that helps ease some of those concerns.
Thank you very much, Farah. So really the famous, last but not least, Jojo, I think because it is kind of not the least topic by far, because it is really, how we're going to go into the future. We touched about, not so many corporate having issued social bonds. So what do you see at Mizuho, both in Asia and globally in that area? And that will be really our concluding kind of forward-looking words.
Thank you, Ikma, Agnes, and a very good afternoon to everyone who managed to stay to the end of the roundtable on a Friday. So yes, I think despite the limited social bond supply we have seen in the corporate sector, there has actually been a variety of issuance. I think taking the context of Asia, in Japan, which is a pioneer of social bond supply, we have seen issuance from the healthcare and airline industry. Otherwise, in Europe, we have seen issuance from utility, such as recently EDF, as James has mentioned, as well as education, food production, and transportation sectors. And in the US, it's mainly foundations and endowments driven by the pandemic. So looking at all these companies, I think it's natural that their business activities actually address some of the key social concerns, and that is why they have sufficient assets to issue a benchmark-sized social bond. The reason being, realistically, a lot of corporates actually do not have sufficient assets, yet they want to tackle social challenges. And that is why we are seeing the supply of sustainability issuance actually rising in the recent years. I think compared to pre-pandemic, there is definitely a heightened awareness on social issues. And it's not just access to healthcare or employment generation via SME financing. To a large extent, we are seeing an increasing focus on diversity and inclusion. A lot of companies that we have spoken to want to address this topic in their frameworks going forward. And some of the projects may be increasing diversity of your suppliers, promoting equitable access to underrepresented groups. But nevertheless, we still need policy support to grow this space going forward. Like a lot of the audience has mentioned, there's still a lack of a harmonized approach to selecting project categories, target populations, and impact metrics. But it is very positive that regulators are looking at these challenges and taking the first steps. In Japan, the regulator has established a social bond working group looking at the criteria on social bond issuance in the Japanese context. And this has actually been raised by corporates who want to enter into the social bond space. And in Europe, of course, the EU Sustainable Finance Platform is supporting the Commission on the establishment of a social taxonomy to complement the sustainable taxonomy. But more needs to be done at a quicker pace. For instance, sustainability-linked bonds with social-related key performance indicators are still not eligible under the ECB Corporate Sector Purchase Program. And this is why most of the sustainability-linked bond issuance are linked to environmental targets. This is a clear roadblock to encouraging more social-related issuance. We have been speaking to companies that actually want to link the KPIs to social targets and are not able to do so. So I think that we really hope to see more traction in policy support going forward.
Thank you very much. Thank you very much to all of you on the panel, because you've done a superb job rushing you through the end. Apologies for that. And thank you to the audience, because we've had really, really good questions. And hopefully, obviously this is to highlight what is going on in our broader ecosystem every single day. So this is just, a one-time event for showcasing all the work all of you in the audience and on the panel are doing. So thank you very much. I do hope that you found it interesting. I did personally. And just a reminder, there will be, in particular, the document we refer to, the pre-issuance checklist, will be released on the at the AGM on the 10th of June. Thank you very much to everyone. And thank you very much to ICMA once again.